Welcome to this post-market analysis of September 28. Well, inflation, energy, and interest rates. Inflation. Yes, again, inflation seems to be now back on the picture as one of the main risk investors see for the near future. But this is a little bit weird. Why? Because this is not the first time the market is setting off huge based on inflation fears. I guess it's because Jerome Powell testified today before the House Committee, if I'm not mistaken, that, well, we thought inflation was going to be temporary. We thought inflation was going to be transitory. We're going to be here for just a short period of time. But it seems like we were a little bit wrong, and it's going to take much more time, and we can see this peaking before stabilizing in the coming months. Well, coming months, what does that mean? Exactly. 6 months, 3 months, 12 months, 18 months. Nobody knows. And that's why I think even though the market was kind of set up to be red today, well, they just went off the ground. Look at what the major indexes did today. Everything is up almost 2%. Nasdaq almost 3%. Even gold is down 1%. But oil held off pretty good because as the S&P 500 movers, you can see this is Schlumberger, an oil producer, and it confirms the theory that I mentioned a couple of days ago, I think yesterday even, based on the money moving out of the tech and the growth sector and going back to the cyclicals, especially energy. Well, look at the rates. The 10-year note went again all the way up to 155 almost. So this is a big yield. That means people are trying to reevaluate the money they are allocated to growth tech, pretty much the Nasdaq, and that's why you can see companies like Amazon today was down more than 2.5% today. So Amazon down 2.6, Facebook down 3.6, Google 3.7, Moderna 6%, Palantir 7.75%. But on the other hand, look at how financials did. They were down just 1.65%. And energy up 0.34%. Well, guys, I guess the reopening trade phase 2 that I mentioned yesterday, it's already confirming itself. And it does make sense. Why? Because the way tech companies are valued, anytime you have interest rates going higher, it is less interesting to be invested in those companies because of the way the valuation works. But we're gonna we can maybe do a standalone video to just to go through that specific item. But it gives you pretty much where the direction of the market is going, and this is something we saw exactly last year at this same time of the year. So September is still not finished. So keep in mind that September, it's always tend to be one of those, bad months, especially because most of the companies on the the S&P 500, most of these companies that are public and trading on the markets have, a final month or a fiscal year ending in September. So a lot of rebalancing going on. But again, the main concern here, I think it's about inflation. And that's why we're seeing, those shifts. And definitely, if you want to invest your money now in some sectors or in some companies that will give you pretty good amount of returns, I think it's fair to really look into energy, definitely, even though there is something higher than just, a rotation based on inflation fears. And we're going to cover that on a separate video earlier today. But also look at financials, but in global, look at the cyclicals. If you look at American Airlines, if you look at Carnival Cruise Lines today, they held off pretty good based on this market sell-off. So there you go, folks. This will wrap up this post-market analysis. Let me know in your comment section below on whether you're interested in knowing which companies or which stocks you should pick in order to have, best return as possible when it comes to the energy or the financials or the cyclical sector as a whole.